Okay, so in our last class, we talked about how to use the trading view, and I also went further to show us how to spot market direction. I told us that price moves in three different ways, which is the bullish and the bearish and consolidation movement. When we say price is bullish, we are saying that price is moving upward. It's rising, price is rising in value. When we say price is bearish, that means we have a downtrend. And when we say price is consolidating, we are neither going up or down. Price is moving in a sideways direction, just like what we have in this area on our chart. You can see price moving in a certain direction, not going up or down. But you can see a price from this point started moving up. Okay, so today we're going to be looking at market structure. So we've been able to spot market direction. So we can see here from the chart, the line chart that we have here, we can see that price is making higher highs and lower highs. Higher highs and lower highs. What do I mean by that? Where's my toolbox? Please hold on. Can't find my toolbox. Okay, so price is actually creating something that looks like this. This is a higher high. This is a lower high. Higher high. And every time I want to have class, my system will drag it. Higher high, lower high, and it continues like that. Okay. So in this situation, we can see price is making consistent move in the upper direction. So we can now see this. So another name for this is that what we are having here, because price is moving up in an uptrend, we call this move here impulsive. The move in the direction of the market is impulsive. The move against the market direction is called corrective. Okay, so we have here impulsive, corrective, impulsive, corrective, impulsive. And why? You can see that the impulsive move are more larger and more volatile than the corrective move. The corrective move most times are in consolidation. You don't move that. They don't have that volatility. They are not impulsive, so they come in slowly. And once it gets to a certain target, price will just explode again in the previous direction, just to resume the previous trend. So this is how you spot the market. So price makes a higher high, lower highs, and all of that. Now, when we say price, this is on an uptrend. Now on a downtrend, let's look at what happened. Now you can see here on our chart that this price at a certain point, after we've been able to spot our direction, we can see that price was making a consistent move in higher low, lower low, higher low, lower low, higher low, lower low. You see this all the time. Price will always do this. Higher low and lower low. So you can see that the movement, the price movement is consistent. Now, at the time that price is tired, that price doesn't want to continue in a certain direction, is going to make this reversal movement here that you've seen. Once it does this, it starts creating a higher high, a lower high, and continues like that. Now, how do we know that price is going to continue in a certain direction? Two things are that you're going to use to know that. One is your trend line. The first thing you're going to use in spotting that price is going to continue in a certain direction is your trend line. What is your trend line? The trend line is to ensure that is to help you know the trend of the market. Despite that the trend of the market is visible, it's more easier to see a well-developed trend than the one that is just starting out. Are we together? Hello? Please mute your mic, except you have something to say. Hello?
Sir, we can hear you.
Okay, please mute your mic. All right, let's continue. Now, like I said, how do you know your market direction? And I said earlier that it's easier to see an already developed market, already developed market than to see the one that is developing. So let's look at an already developed market. If I use my trend line, I could easily spot this and see, oh, price is in a downtrend. As long as this price has not gone above this trend line, we are still bearish, okay? As long as this price has not gone above this trend line, we are still bearish. Another thing for you to know that this price is going to still continue in the previous direction is that the previous low, look at higher low, lower low, higher low, lower low. If you observe here that the first higher low followed by the second higher low, the second higher low, you will not challenge the first higher low. So that means it's going to keep creating. Why is it called higher low? Because it's lower than the previous high. Okay? And why do we call this one lower low? Because it's lower than the previous low. Higher low, lower low, higher low, because this is lower than the previous low. So we continue like that. Okay? Higher low, lower low, higher low, lower low, higher low, lower low. Now look at something. At the point that we came to this market, price came around here and failed to take out the previous low. So we do not have another lower low. We now have an equal low. We now have an equal low. So once price has been able to beat the previous higher low, we are already anticipating price a change in price movement. Please, if you understand so far, type yes in the chat box. So once the previous low has been challenged, has been taken out, that means we are now anticipating a change in market direction. Please, if you understand me and you're still hearing me, type yes in the comment box. Thank you. Another thing for you to know that price has changed direction is that price is also going to take out the trend line. Okay, as you can see here, the trend line has been taken out. Nobody's responding to me. Are we still together? Hello?
Yes, we're together.
All right, thank you. So you can see here that price has taken out the trend line, and I've also taken out a previous higher low. Now creating what? A higher high. Now you can see that market now created a lower high because what? This high, why is this high called lower high? Because it's higher than the previous low. Now we now have a higher high because the higher high is higher than the previous high, and price continue creating that. Now, if we take out a trend line, we could easily measure out a particular to see that we have a new trend line here. Okay, so this is how to spot your price direction. This is how to get your market structure. Now, why is price bouncing off this place? Apart from saying, you've noticed that some of the price retracement or corrective, remember, when price is on a downtrend, we have, or when price is bearish, we have impulsive, corrective, impulsive, corrective, impulsive, corrective, impulsive, corrective, impulsive. And once this happens, we now have a change in market direction. So this becomes impulsive. You can see here that the candlesticks here are quite healthy. They are not short. You can see the green candle here refers is for the buyers and the red is for the sellers. And now you can see that you start having huge green candles coming out and shorter red candles, showing that the buyers are completely in charge of this market. Completely in charge. But look at when price was bearish. You can see you don't have, you now have longer, more red candles coming out, printing out than the green ones, more red candles and longer ones, printing out than, it continues like that. Look at this. Look at short green candles. And since market was still bearish, it was printing out huge red candles. But the moment price is showing signs of heading that is going to change direction, we started spotting this healthy green candles comes out. So you're going to observe your candle, the kind of candle that your chart is printing at a time. Okay, you're going to observe the candlestick as well as what is happening. So this is very important. This is how to spot your market direction and price structure. Now, why is price bouncing off a certain zone? Now, previously, if you are living in a story building, and you are on the first floor, that means the structure above you, you now have a ceiling above you. But the moment you move, while you're on the first floor, the ceiling above you is the resistance, preventing you from going up. But the moment you find your way up to the second floor, you find out that the same resistance that was there to prevent you from going up is now going to support you to stay up in the building. So this is what I mean. At this point, where's my toolbox? Okay, look at this. Price was bouncing off this place, okay? This was the support level. The moment price was able to break out of this level, this support level became what? A resistance, preventing price from going up. Preventing price from going up. Is now going to resist price to continue downward. Now, the same level here, we can now spot the same thing happening here. The same thing. Price will always repeat itself. Look at this. Okay. So the moment price was able to break above this level, you can see price. Let me make this a little bigger so that you can. But when we start going deeper into it, you will learn how to adjust it properly. Now price came in here, bounced here. Okay, let me delete some stuff so that we can see our chart clearly. Look at what happened here. All right, okay, around this region. okay? Price came in, bounced around the area, moved up, broke it, came back again, could not go up, pushed down, came back to the same zone, price was resisted, price came down again, something else here, okay, price was able to find its way back up, experienced a little resistance again, and price successfully broke through. Okay, remember what I said about the ceiling. Now, price has broken through the ceiling, and the ceiling automatically became a floor for price to hold higher, and price started moving up. Okay, so you can also see that across here, this level, price came in, even when it has broken above, price came in and struggled in this because this was a previous ceiling. Okay, this was a previous ceiling. Price came in and struggled around here for a while before breaking through. The moment price was able to break through, price came back and used it as what? As a support to continue upward. Look at price came in the first time, bounced again, and then moved up. Now, there was a resistance here that made price move from here down here. So what happened? When price broke through, price came in and used the same area. We call it a zone. It is not a specific place. It is a zone. Even when this zone was not able to hold price, price came back to the previous zone and still bounced off it. This is how amazing price can be used and understood sometimes. I'm not going to go too deep into this so that one will not get overloaded with information. So this is how to spot your market structure. You can see we've been on the way up since. Look at what is happening here. Price was resisted here for a long time, and price finally broke through and is just pushing up. Maybe in the future, it will come back and use this place as a support and continue, or break through it and bounce over it. But then you should always be able to use your trend line, spot your market direction. Now, what do we do with market direction? When price is trending upward, you are only to look for what? Buy opportunity. You're only to look for buys opportunity. When price is trending downward, you're only supposed to be looking for sales opportunity. Now, when price is consolidating, what do we do? Can someone assist me? I think I have some old students here. When price is consolidating, what should we do?
Good evening.
Evening, sir.
Yeah. If price is consolidating, we have two things out there. Either you leave the market or you decide to trade it support and resistance.
Okay.
Or you just draw. If consolidating, it means it's inside channel. You draw support and you draw resistance. In between, you wait for any of the side to break out. If you are wishing to leave the market, don't want to trade it, you wait for any of the side to break out. Or if you want to trade it, once you get to resistance or support, you draw your kata trade line, wait for confirmation, trade it down to the other side, support or resistance.
Okay, that's Professor Richard. All right. So when price is consolidating, you are to either leave the market, especially as a beginner, or using our strategy, you will have to wait for price to break out in a certain direction. Best practice, let price break out in the direction that you are anticipating the price to continue. Okay, so look at something like this. Let me look for the market. Now look at this. This is not a good example. Okay, let's look at this. This is price ranging here up and down, okay, around this region. Price is ranging, okay. So you have to wait for price to break out in a direction. So we can see price broke out to the downside, okay, nicely broke out to the downside, retested the area, and then continued. This would have been a beautiful sell for anyone looking to do what? To sell, because price was trending to the downside. So remember what I said, it is best practice for you to get price breaking out in your anticipated direction, okay? It is best practice. Look at this one. This was price consolidating here. What would I have done if price break out in this place? If this market was already developed, because this was already a developed this was a developing market, okay? Because previously price was bullish, as we can see, price was bullish. But then if price breaks to the upside, you would have bought this market. But unfortunately, price started doing what? Reversing from here, okay? Maybe you would have taken a break even or a loss here. Yes, losses are part of what we are doing. You are not to be, you are not coming here to try to be correct. You are trying to have more winning than losses, because market will always do its thing. Okay, so in this situation here, maybe you would have taken a loss or something, but you would have spotted that price is developing in a downward trend. So the next time you see something like this, you would have seen price break out in this direction and you would have gotten this sell, or wait for price to retest. While price retesting, this is what he called counter trend line. In our next class, we'll look at this in details, okay? Once price breaks this with the momentum candle like this one, or either you call it a momentum candle or an engulfing candle. An engulfing candle means that there's a bearish candle that has engulfed the previously bullish candle, as you've seen, that there are two candles in that particular direction. So we have an engulfing candle here. Once this happens, you jump into the market, put your stop loss above here. Please, I'm explaining everything now, both for the new and the old. So don't come back and ask me, where do I put my stop loss? So if I were to enter this trade, I would have entered this trade here, okay, on this candle, at the closure of this candle, and then maybe put my stop loss a little above here, and then target this low, okay, and target this low. This would have given me 3.1 risk to reward on my trade. So this is how you go about it. So I would like for the new students, please, I would like you to do what? Some of us have already spotted the three price movement, but I would like you to draw your trend line, spotting your direction correctly. Now, how do you draw a trend line? How do you draw a trend line? Please pay attention. You're going to draw your trend line from point one, the first two outer points, okay? Now, in a developing price, you would have been confused at the time to have this as expecting price to go up, okay? This would have been nice. You would have gotten a buy here, but price have changed direction, giving you this. So you would have mapped point one, point two. Week to week, do not cut into the body of the candle. Point one, point two, week to week, okay? And then you continue. Now, just mark this week to week. Look at point one. Now, I will teach you what this is, okay? This is not a break. This is not a change in market direction. So just mark it week to week. Don't cut into the body of the candle. So let's see what you get. Now, for those of us, for the old students, please, new students, you're not hearing this. For the old students, you can actually spot what happened here. If someone should tell me what this is, for those that are old in this class. So we have our first point here, point one, point two, but something happened here. Please, what happened here, please? What happened here?
Hello.
I can hear you, sir.
in that place, we observe a fake out there.
That's not a fake out.
Fake,
That's not a fake out. Someone
fake
just
breakout.
sorry?
Fake breakout. Fake breakout.
No. Okay, let me help out. What we have here is invalidation. That's invalidation. We have multiple candles coming in and out of your trend line. So that's what we have there. So in this situation here, we adjusted our trend line. Okay, so this is a fake out here. What we have here is a fake out, different from this one. And also price did not break past this level. So price, we did not see this as a breakout. Because if we have seen this as a breakout, this would have been a little confusing to us at a point in time. Maybe you would have still been able to hold this price here, but with a lot of confusion. But let's leave that for the next class. So spot these few things. Spot your trend line, market week to week, do not cut into the body of the candle. But if after your first 2 points, price cut into the body of the candle, leave it. Just mark it across. Then we'll treat it in our next class. And also mark your support and resistance. Remember what I said? Market moves in higher highs, lower highs, and all of that. And I showed you why price bounces off a certain area, a certain zone. So you mark your trend line, your bullish price movement, bearish price movement, and also your support and resistance. Okay, it's very simple. If you don't understand it, there are other videos. The second and the third video in our channel has it also, so you can look at those ones and have a deeper knowledge of what I'm talking about. In the next class, we'll now look at, we'll now review this and then look at some entry strategy. Okay, so I'm going to stop here and take questions. If there is any question, please. Do I have question, please? Favor, you've not been asking question. Mr. Gospel, please ask question. This class is specifically for the two of you. Hello? Hello?
I'm with you, sir.
Please ask question. Okay, since you're not asking question, me, I will ask you. When price is bullish, what are we to look out for? When price is bullish, what are we to look out for?
You look out for buy.
Buying opportunities.
Yes.
So we look out for buying opportunities. Okay. So when price is consolidating, what do we do?
You leave the market. That you leave the market. As a beginner, you leave the market.
What's the second option?
Second option, I don't really understand the second option.
Can someone help out with the second option? They say we leave the market, but we have a second option.
Hello?
Okay, I can hear you, sir.
Yeah.
If price is consolidating, you leave the market. Or the second option is that if you wish to trade that market, you have to know that you want to trade support and resistance. Once you get to your resistance level, you trade to up. Once you get to your support level, you trade down.
No, I don't encourage that.
So
it's risky. I don't encourage that. This is the reason.
Hello.
We don't.
what you do is that you draw your channel in the two in support in up and down, which is support and resistance. Wait for it to break to any of the side of the channel and retest before you know what to do.
Okay. Let me point out something. This is a consolidating channel. Okay. This is a consolidating market. For those that are trading ICT, this is called accumulation phase. Okay. Price is accumulating liquidity. It's going to sweep everybody out, take liquidity, but because, like he said, people are trading here. Okay. People are selling here. Just put their stop loss. When price comes here, they sell, put their stop loss above here. And then they buy here. Okay. So once price keeps bouncing all of this, and then the institutional traders are seeing this, what do? They will sweep both up and down, just like in this situation. Look at this. Okay. Look at what happened in this consolidating phase. Price sweep up, and everybody think, oh, price is going to go up. It's buying. Price sweep down. Okay. So you just stay, you don't try to buy and sell off the zone. Just stay off. It's a dangerous strategy to trade. Rather, let price break out in your direction. In your direction. It is best that way. Are we together?
Yes, sir.
So I'm going to stop here for
Hello,
now.
sir.
I hope we are writing.
Hello, sir.
Yeah, I can hear you.
Sir, what about if it does not break out in your anticipated direction? What do you do?
If it doesn't break out in your anticipated direction, wait for price to develop, because price might be changing direction. Okay, look at what I explained here earlier. See, this price here was going up, okay, and then accumulated here. Look at what happened. Price accumulated here and broke out in our anticipated direction. And then before we knew it, price speedily came down. At this point, you'll be confused because it has broken this trend line. So you want to see what price is going to do, because you wait to see price developing downward, and it bounced off this level. Accumulating again. By this time, I should know what price is doing. Coming back to this trend line, because I'll be able to mark out this. So you either try to understand what price is doing. Never you chase price. Do not chase price for any reason. Once you don't understand, reanalyze, and then make the best decision. Are we together? So that is what, don't run after price.
Hello, sir.
Yes, ma.
I have a question.
Please ask.
So I want to know the difference between invalidation and effect breakout, because I cannot spot it.
Okay. I wouldn't like to go into that topic now for the sake of the new people, so that to not be too much information, but I will touch it a little. Invalidation. You see invalidation and effect breakout, right? Come again.
Yes.
Invalidation
and effect breakout, yeah.
Okay. Now, invalidation, this is price coming into your trend line, in and out. It did not just break out. Okay. It did not just break out. It just came in, dash inside, in and out, in and out. So what you do in that situation, we have invalidation here. So we're going to move our trend line to the last, at the highest point of that invalidation. This is how we keep adjusting our trend line to be able to get price correctly. But in this situation here, we had a fake breakout. Now, why is this a fake breakout? Because it came to the same level with this. Now, what is a fake out? A fake out is a breakout that is not, that has broken, that is a valid breakout. This is what we mean by a valid breakout. Just like this one, price broke out. This is a valid breakout. It did not stop at any, it broke this high, and even this one, okay? But a fake breakout, a fake out will come in like this and immediately return back inside the trend line. Immediately, instead of it to break out and bounce off the trend line and continue upward. No, it breaks out, come into the trend line again and retest the trend line from inside and continue moving.
That's a fake breakout. Okay.
I will explain it in details in the next class so that those that are new will understand it better. I was trying to spot it on the chart. You don't have it all the time, but I will try to spot it for us in the next class. Okay, look at something like this. Let me see if this will go for us. If I were to mark something like, look at something like this. See what happened here. Price bounce off this trend line. Okay, breakout. It did not react to any zone. Look at this. It did not react to this zone. It broke this previous one. Though it reacted here, but came back immediately inside, bounce in, continue in its direction. But one would have said, oh, it has broken out, and you start looking for what? For a sell. Okay? You start looking for a sell only for it to keep pushing back inside. But if you were anticipating a sell, what you would have done in this situation would have been for you to do what? Mark your counter trend line to see it come to this trend line and react and break again. Once it breaks again, we sell. But since it did not do that here, we are not interested in the selling. We are not interested. This is how not to get trapped in the market. But I will still explain this in details in our next class. So I will stop here for now. And then, please, if you have any question, send it to the group. I will answer it. Thank you very much. Good night, everybody.
Good night, sir.
Good night, sir.
Night, man.